time.
Man, very long time, but back.
Yeah, I forgot how to work these things, but we're gonna get in it. Man, I just want to talk about the market, and I always want to talk real estate. So it's been a minute. What's up, Candace? Get my girl RB in the building. Gonna talk a little bit
What's
about the.
going on?
Yeah, I know it's so random. It's been forever. You know
I just,
me.
you know what happened? The thing, when you hit the button on accident, I was so glad it was you. I would normally you exit out, but thank God it was you. How are you?
I'm good. I'm actually really good. So I'm still around here, but I've been wanting to do. I can't help myself but to talk real estate. So, uh,
Please, yes, speak real
yeah.
estate.
So it's been a little bit of minute. Let me
Get some
figure out
people
how.
up here. Okay,
Yeah, yeah. Let me figure out how to drive again and
I got a call coming in too. All right, bye.
figure out how to drive a little bit. See how things are going. Um, for anybody that don't know me, hey y'all, I'm Najee Barnes, long-term buy and hold real estate investor out of Houston. Um, really, I've been on, used to be on Clubhouse a lot, but just wanted to come back and talk a little bit about the market, what's going on. There's a lot going on in the market, a lot of noise out there. What's real, what isn't? And anybody that also knows me probably know that I love talking economics as well. So we're gonna get into it just a little bit today. Um, and see what's going on. What's up going on, Gilbert? How you doing today? Tell a little people about yourself, what you normally do.
Real quick, Gilbert Okaranquo, long-term buy and hold investor, also build to rent investor, build to sell, fee build under the company name Grace Building Company, located here in Houston, Texas. Always a good thing to talk about real estate, especially today. 2025, we thought this was tough. I mean, I think it's only going to get a little bit rockier going forward into the new year.
All right. Well, what's up? What's up? Let's keep talking.
Hey,
Think Candace on the
hey.
phone. Hey, RB, what's going on?
Good evening, real estate rush hour. We're back at it, huh?
Yeah, yeah, we are. We gotta figure out how to drive again. So I'm gonna invite a couple of
I
people.
understand that. That's why I said we might as well ain't nothing to it but to do it.
Ain't nothing to it but to do it exactly, exactly. Well, RB, it's been a minute. We used to run these things like clockwork. Tell the people about yourself, who you are, what you
Oh my
do.
goodness.
I know. Remember these?
It's weird almost. Okay. My name is RB. I'm a licensed real estate broker in the state of New York, a buy and hold investor on the residential multifamily side, and a landlord operating solely in the long term rental space. I think that was it. I think that's what
I,
I used to say.
what was? But what? So okay. So some of the people ain't seen you in a minute. What have you been doing these days?
Oh my goodness. So there's so much that's been happening. I've gotten on a couple of real estate development projects, commercial real estate development outside of New York, coincidentally, which I never thought I would be doing, but I have been doing. And then also, I've launched my real estate brokerage, which is your one stop shop for all things real estate sales, leasing, property management, the Golden Key Real Estate Brokerage. And also, we have our team heading up a few condo conversions, which are going from apartments and condos into condos in New York, and we're selling out those buildings. So we are looking for people who want to purchase their first home because the good thing about it, it's going to be affordable housing. So it allows an opportunity for a discounted price point on condos in Manhattan, which is amazing. So, so
Congrats, RB. That's dope. You got a lot going. So that's what's up. That's good stuff.
hey, Gilbert, it's been a while, sir. Yes, sir.
Life.
Yes, sir. I get it and can relate. It was my daughter's birthday yesterday, so we're still in full on birthday mode for my 9-year-old. So
Happy belated.
hello.
Oh, she's live. Okay.
Yeah. Yeah, we're doing math work right here as we speak. But I'm excited for this because we were talking about getting this conversation started again, and there's been so many different things that have come up. Hey, Donna, so many different things that have come up in the world of real estate. There are so many different topics that have been floating around. 50-year mortgages. Is it a good time to buy? Is it not a good time to buy? What are these interest rates doing? Where is the market going? So there's a lot of different topics, and Onaje and I usually do our walk and talk. Hey, Anthony, there you go. Usually do our walk and talk on Monday mornings at 9 a.m. But we were like, you know what, we need to get the gang back together and get things rolling. And so that's where we've come in at. So, Donna, you just walked into the room. Would you like to introduce yourself, ma'am?
Well, good evening, good evening, good evening, everyone. I'm Donna Page, emerging developer, real estate investor, been around in these clubhouse streets since almost the beginning. Just super excited to be here with my friends tonight. So thanks so much, Irby.
Man,
Awesome. And we have
appreciate you
Colleen that joined us
responding
as well.
quick, Donna. Thank you for coming with the random text.
Did you just send that out? The bat
Back
signal?
signal.
Listen, you're in that special group that
I
those
consider
messages come
myself
right
very
in.
special. I consider myself very special on that one. And I
Yeah.
had just got a call, and with the call giving me a $30,000 check. I'll tell you about that later.
Okay.
But they were just calling from a round number, so I was like, I gotta take that. I
So
gotta take
wait,
that.
quick question. How do you now, because it looks so different, how do you now actually invite people? Oh, okay, up at the top. Oh gosh, this whole landscape is different right now.
Same way we used to invite people, I think.
No, 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 not even that. It's in a different location. It used to be at the bottom. Now it's at the top next to the leave button that you can invite people to come on into the
Oh,
conversation.
you might be on the old app because mine's at the bottom, or maybe I'm at an old app. But
I
one of
think you
us
haven't
is.
updated. However, comma, here we are. So what's the topic of conversation, Onaje? What are we going to
All right,
be
so
diving into?
look, so for me, I think hey, I love just talking real estate, and ultimately the market's very weird right now, right? Like let's just keep it real. There's some people that's eating, and I think the people who have had established businesses, established brands, and know what they're doing, been through most of the market cycles, are doing quite fine and quite well. I think if you talk to some of our lender friends, they may not be too happy with this market right now. They seem to be seriously hungry. A lot of realtors that are not the below average realtors are probably not doing that well. And look, keeping it real, me and Gilbert talk about this all the time. You know, landlording ain't that great right now. I mean, these tenant applications ain't the best these
Mm.
days. A lot of people late, and a lot of people late. We got construction costs probably going up. Some of your labor may not be around. There's a lot of moving parts. So y'all, if y'all don't remember how we like to host our room, I like to jump the conversation around a little bit. Guys, feel free to come up and speak. Um, the only rule here is if you got something to say, say it with your chest. Say it. Um, but remember, if there's any factual statements that you want to say, we go by old Clubhouse rules where we like to give information inside our sources and things of that nature. So, with that being said, um, yeah, you know,
So,
Gilbert,
well,
go
Colleen
ahead.
came
Go.
in here and didn't get an opportunity to introduce herself. Colleen, did you want
Oh,
to
oh,
jump in and
yes,
say
Oh,
hello?
yes.
thank you. And I'm so happy to receive the bat signal. I love that you are hosting this space. Happy to be here. But I am a serial entrepreneur, real estate investor, landlady, and I also run some independent living facilities. But yeah, happy to join the conversation. I'm sharing the room out in the background now.
Oh, help us out. Help us out. We rusty at this. It's
And
been
we're
a
going to be back here just for everybody that doesn't know. We'll be back every Monday. We're going to do like a real estate rush hour, which is going to be capped off at an hour. But don't worry, if the conversation gets spicy, we'll just try and put a pin in it, and then we'll continue it the following Monday. We're going to be doing this every week, right, Onaje? Every week.
hey. If you say it out loud into the space, then it becomes true.
Right.
I'll got my friend Amy in the building. Come on up here. We got a couple people in the building to talk about a few things. Is this Di? How do I pronounce your name?
It's day.
Day. Nice to meet you. How you doing?
I am okay, a little under the weather though.
Okay. You want to come talk to us about real estate? What are you seeing? Who are you? What you got going on?
Well, I've been a renter previously, and I'm thinking about settling down and buying my first property, but I'm debating whether or not I want to get into like um, shelters and safe havens before I explore personal properties because I think I'd probably want to rent for myself, like have a little apartment for myself or a tiny home. But I definitely want to help out with the homeless crisis because it breaks my heart when I see where the homeless crisis is at.
We're gonna put a pin in that because I think some of us got an opinion, a strong opinion about that. I want to go to Amy right quick and let her introduce herself, but we definitely gonna come back to that question, in a second because I think many of us on the stage have strong opinions about how we want to go about this journey of home ownership and investing. What order we would like to go into? That's a hint. Amy, Miss Amy, what's going on? Long time no see or hear. How are you doing?
I'm good, Anaje. Thanks for texting me about the room. I'm doing
Yeah.
well.
Well, I appreciate you coming through. I just want to talk about the market, and I appreciate you coming through because you're going to give a different perspective of how you see things and what's going on, in
Uh-huh.
general. Tell people a little bit about yourself, who you are, what you do, things of that nature, so they
Sure.
know who they're talking to.
I'm Amy Palvido. I'm a longtime real estate investor. I've been in construction and real estate since 2003, so 22 years, almost 23 years now. Um, and I also was a real estate investor. I started investing in real estate in '08. And I scaled that real estate investment business up to now where I have a real estate fund and I've been in private equity real estate since 2010. Right now, the things that I build are data center and industrial parks. I did multifamily for a long time. I did mixed use for a long time. But now I've pivoted into data center and industrial, and yeah, I
You
think
know, I
I
got to
think
hear. We're going to put a pin in that one too because I got to hear more about
yeah
this. I
yeah
I hear about data centers, but I'd love to kind of hear from your perspective.
Amy, I need a
sure
loan too. If you're building data centers, you probably can loan me a couple of dollars with no issue. Please. Thank you.
sure. And so but and in my I have multiple hats I wear. I'm a tech founder. I started a real estate technology company, and I also chair the U.S. PropTech Council, which is the trade association for the real estate technology industry in the United States. I do all of those things. And I'm getting my doctorate at Purdue University. So I'm a busy girl.
Come
But
on, doctor.
I know. Not yet. You can't call me that yet. I got like 4 more years before you can call me a doctor. But I just platted out my graduate program today, and I was like so bummed out. I'm like, oh, really? Okay, fine. But it's gonna be good. It's gonna be good. So the market, I would say, we were in technically in a real estate recession as soon as I think Jerome Powell did his second interest rate hike. We started in that recession. That took a huge amount of buyers out of the buyer pool, and it continued, right. And so, from a housing perspective, the on the commercial side, the rates kind of stayed in the fives. They got to the sixes, but it wasn't crazy. But it was difficult to make it pencil because the prices wouldn't adjust. And so you had this disconnect between what the sellers are having to sell it for and what the buyers were willing to pay, which happens in some instances. But it got exacerbated because of inflation and the ability for you to just insurance costs and payroll and if you're doing any sort of capex budgeting, it nothing was working, like no, and so no transactions were happening even though the interest rates for commercial debt were in the fives, right? But you still couldn't get anything to pencil. Like, and a lot of people weren't transacting because, not a lot of people had fixed rate debt. I would say between 2020 and 2021 on the multifamily side, you had mostly variable rate loans. They were all bridge debt. It was the area of the era of the bridge lender. There was a million bridge lenders, and a lot of that debt was all kind of debt fund kind of debt. And so people are trying to figure all of that stuff out. So there's this big crunch, and a lot of multifamily people did not want to sell because they didn't want to take a haircut, which kind of sucks, but is what it is. So I think right now, the office market is up and down, and it's really kind of geographical, where it might work, it might not work. I think office is not dead. I think you still will have kind of a resurgence in office because I think just most people are just going to figure out they've got to be in an office in order to be productive. Where we get from there or how we get to there, I'm not sure when it returns. Life sciences is dead. Like, don't even bother. Like, there's such huge vacancy rates in life sciences. Sorry, I'm driving. You also hear that. Trying to go through all the asset classes in my brain. Industrial, depending on where you're at, is having a hard time. But one, shining star is data centers. They're freaking on fire, and the vacancy rate in the data center industry is less than 2% nationally. If you go build a data center, it will, before you even push dirt, it will be 70% pre-leased on average. And but it is not an easy thing to get into. You can't go from going to be a multifamily developer to become a data center developer. It's very difficult. It requires a lot more cash, a lot more access to funds. It's not an easy endeavor, and as I am learning. Um, but yeah, I mean, the market, I think, will rebound. It's going to rebound. I think, as we see where the interest rates go and people take a collective breath that, that it's going to slow down. So yeah, I don't know how long we last in the quagmire, but we're in this like
We are in
limbo
the
state
quagmire.
where yeah, I mean, there's not a lot of transactions happening, and partly everybody kind of thought like once the Fed reduced rates that it would kick off this frenzy, but I think it's just the tumultuousness of the administration
Well,
causes people to
there's
like wait.
I mean, I'm a jump in right there because that's where I love to talk about, and I feel like there's not enough conversations about it. So Amy, leading the question, the Fed has officially um the Fed has officially lowered rates twice, I believe, but we
Right?
have not really seen a significant
No,
decrease in interest rates. And
no, not
I think a
yeah.
lot of people are like, what's going on with that, right?
Well, I
Um,
mean, so most commercial debt is not based off of the Fed, the prime rate. It's based off
correct.
of the 10-year Treasury bond, and that hasn't adjusted. So because it was technically lower than the prime rate for a while, and so it just didn't move. It's like, well, that's cute. Yeah, we're not moving. So
Yeah,
it's
no,
interesting.
it is interesting. I want to I'm gonna pass the mic to my man Kareem, but I definitely want to say this is where I want the conversation to go. I actually want the conversation to go here because you're right. The 10-year Treasury really haven't moved. And the problem with a lot of us as real estate professionals that frankly, most of us don't understand that the 10-year treasury is really about faith and it's about trust in America long term.
Right, right,
That's what the 10-year treasury is about. It is
right.
about an investment in America long term and how
Yep,
do people feel about America long term. And
yep,
unfortunately, it hasn't really moved. We're gonna put a pin on
yeah,
that. I'm a
Yeah. I was going to say, I noticed that some people, I love this new feature what they have going on with the whole polling situation. So I noticed that some of us, it looks like by your icon, you can tell who has replied to the where is the real estate market going. So some people, 67% said that they felt like it was going in the right direction, and 34% said that it was going down. So I want to invite everybody that is in the audience to just take a second to click on where you think the real estate market is going, because this is all about a conversation with the whole room. So we want to get a little bit of feedback from everybody who's in here, and it looks like Onaje just took a call.
No,
So,
I'm here. I'm here.
oh,
I don't know what's going on. My
oh,
deal is glitching. Well, first of all, I got to say what's up because I'm gonna come back to that, Amy. But I want to make sure I introduce my man Kareem. Kareem, you there? What's going on, brother?
Yes, sir. Good evening. Good evening. Oh, Najee, man, how you been, bro?
Man, random. I'm doing well, but I obviously haven't been on Clubhouse in quite a while, and I figured, man, I gotta talk real estate. I'm getting the itch. I got the itch to talk to people about real estate, and unfortunately, my everyday world, I don't get to have these conversations that often. So I gotta make a comeback.
Yeah, that's it, man. But you know, your voice is definitely needed out here, man. I learned a lot years ago when I first hopped in here. You know what I'm saying? So I'm glad you're out here still giving it the game. RB, how you doing?
hey,
Miss
hey, we're
B,
back.
how you guys doing? Like, if you guys don't mind, I want to introduce my business partner Mo too. My
Come
partner
on up
Mo's
here,
down.
Mo. Where's
Yeah,
he
he's
at?
down in the audience right there.
We'll bring him up then.
Let me grab you real quick.
Come on. I ain't got no stingy stage. Ain't no.
It's my brother Mo, man. We flipping houses, you know, very active every day together, man. It's my brother right there. So
Good afternoon. Good afternoon.
What's going on,
Good
Mo,
evening, everybody. Good evening. How are you guys?
brother?
How do I think the market's going? I think you guys summed it up. Where we're in like a transitional period right now, where there was a lot of money flowing, and that money dried up, and now you got people sitting on the sidelines, and rates still not super low. So I think there's a lot of scared people out there right now. I think still stuff is still selling. It depends on what market you're in. Jersey, if it's a deal, if there's real value in the property, if it's renovated, you're still gonna see transactions. It's just not the liquidity is not there like before. What people are saying is absolutely right.
Now,
But if you have a product and it's an elevated product, I think there's no market for that.
Mo,
Mo, so you're located in New Jersey?
No, I'm located in Medellin, Colombia. I
Oh,
live in
you ain't heard
Medellin.
RB Mo and Kareem are killing it in the game in Colombia.
Yeah,
oh, really?
yeah. I'm sitting right now in Envigado.
yeah.
Okay, okay. I didn't want
Yeah.
to Onaje, we can't hop over what
No,
they
we
had
got to
asked
jump in.
before
I'm
because
a I'm a since you reminded and made sure that we have to service the people first and not ourselves.
yes.
Um,
Yes.
I'm gonna bring this back to today's question, and I'm gonna leave it to you, RB, to start the answer off because I think you're gonna say probably what I'm gonna say, but
Could she
Day
repeat her
wanted to know.
question again, Day? What was your question?
Well, it's funny because my question was more so a response to the question that was proposed to me. And where I'm planning on going in real estate might be within the next maybe 2 to 5 years. So it's nothing nearby that I'm planning on doing. But right now, if I don't go back to renting again, I'm debating whether or not when I finally do settle down, if I'm going to get into maybe like a green market tiny house for myself that I might, like build by my hand. Cause I graduated in architectural mechanical drafting in high school. Um, and I really want to get into like hempcrete and stuff like
Okay.
that. But I have such a heart for the homeless crisis that's going on. Like, I don't know if I want to get into like the safe havens and the shelter business in New York City to help, kind of like deal with the crisis that's going on, at least in New York, and then maybe branch out internationally.
So I'm from New York as well. So I have a very, very, very big passion point with helping with this affordability issue inside my amazing city that I come from. And also making sure that we give access an opportunity to people to get into the ownership seat, right? Because as you know, a majority of people, especially in the urban part of New York City, have been generational renters, and that has been just the way. So my first and foremost thing before any business endeavor, before you start helping other people's, you have to make sure that you've positioned yourself appropriately and you yourself are sitting in the ownership seat. I feel like there are a lot of great ideas for ownership that are available, but a lot of times people do that and they are getting into other businesses and still throwing their money out the window and renting someone else's property. And so I'm just like a big proponent of making sure that you get your financial house like 100% stable. It might be in order, right? But then just make sure that you're investing in yourself. And then obviously from that, you can opt to leverage that investment to get into other different investments and so on. But I definitely think that the first and foremost thing would be trying to make sure that you actually are in the ownership seat, and then you can do so much else with it. And so speaking of what you were talking about with with the homelessness situation and also affordability, there's a lot of different projects that are now going on because there is a big push, especially within the boroughs, to try and change that narrative for ownership, especially in these areas that are being gentrified. So there are a lot of different programs that are putting people that are renters in position. And specifically in New York City, the Home First program allows you up to $100,000 in down payment assistance towards your closing costs and also your down payment to help you purchase a property as a first time homeowner. And that can be a condo, a co op, a single family, up to 4 units. So there's a lot of different things that are available, but my start would always be the same start that I even had for myself as a New York City person, getting tired of paying other people's mortgages, is to own something yourself. And sometimes the best way, especially in a city like New York, is multifamily.
Ooh, hot and heavy. I knew she was gonna say that, y'all. So no, check this out, Dave. I'm coming from an investor perspective, and truthfully, I heard that you were maybe interested in potentially helping the homeless and doing that route. I'm a big fan of it doing exactly what RB said. Take care of yourself first. It's important to take care of yourself first, before you can take care of others, right? And even though it sounds like you might be financially good, without the stability of a long-term place to live and stay, you're not as safe as what you think you are, and that's just real, right? We see the fluctuations. I'm a landlord. Guess what? AIM is a form. A lot of us are landlords up here. Yesterday's prices on rent is never today's prices, right? They typically go up. So you want to secure yourself first. You want to make sure that you can get yourself into a place to stay. Now, here's the crazy part right now. I'm literally going to switch the conversation up and get back to this topic, and I might talk about some negative things. I don't want you to listen to that because what I'm talking about may or may not apply to you. And the reason why is sometimes where the market is going is not how we should react. Meaning, I actually voted blue. So everybody, make sure y'all do a vote up there, green or blue. Right now, greens are winning. People think
You
blue.
voted blue?
I did vote blue. Um,
Me too. Me too. I had multiple tenants not pay their rent this month.
I voted blue.
it-
I voted blue
Did
myself. Yep,
Gilbert? Oh my goodness.
absolutely.
I guess it's subjective, but
but but
it
but
might
look,
be market
but
specific though. I would
no, no,
definitely
no,
want
no,
to
no, no.
take that into
It's not.
consideration.
There you go.
Exactly.
Sub-market
Yeah.
specific. So
So Gilbert, say that the second part again, right? We always talk about market specific. He said product specific. So what do you mean by
so
that, Gilbert?
product specific. So I'm speaking specifically to my market. I'm not an expert of other markets, but in here in Houston, in the inner cities, proper Houston, 1 to 4 real estate values are down, with the exception of like just elite neighborhoods where the home prices start at like 1.5 million. So so like I'll talk about duplexes specifically. So the phenomenon we've seen happen over the last 3 years here in Houston, so many people. So first of all, so much capital came to Houston to lend from California, from New York, from a big player in Ohio, from some guys in Chicago. So everybody became a duplex developer, right? So we have all this product on the ground right now, but we don't have the demand to meet the product. So now you have so many borrowers that have, these hard money interest rates due every 30 days that haven't sold, this inventory they have. And then even if you do have conventional lending, you still have all this stuff and product on the ground that hasn't moved. And so what we've seen happen, I'll speak specifically to my market in the Sunnyside South Park area. We've seen duplex values come off about 3 to 4% in a real number. And then even as a seller, big difference between now and 2 3 years ago. You're having to pony up some significant concessions just to get stuff moved. So if you're a buyer right now, it's a good time if you're a retail buyer, but it's even a better time if you take the approach of an investment mind and you try to create the value. And it's unfortunate, but there's always losers in real estate. There's some people that are really hurting
Bingo.
right now. There's some people that are really hurting and they have to get off of whatever they have. And they're going to have to,
Bingo.
they're going to have to get off of it, or they're going to lose it. So uh, it's really a great time. That's why I always wonder when people say, these interest rates may come off. We're going to see so many buyers come back into the
I don't think
market.
that's the
But what
case.
type of buyers? It's going to be investors. It's just going to be even more of an investors market. And investors are going to be sharks. They are not going to leave meat on the bone for people that are in trouble,
But
period.
because the banks ain't gonna be giving, banks ain't about to sit up here and give out these 100% financing options, y'all. Look. I said bingo a couple times because on like first of all, where the market is going, to be clear, is relative to you and your position and your thought process and what your goals are, right? So he said product type and obviously real estate is market centric central. Like New York isn't gonna operate the way Texas does, right? But the other piece is where are you sitting. Amy came in hot and heavy with talking about asset types. All real estate is not the same, right? The asset types that you're in are changing, right? Um, uh, um, if you're in multifamily right now, multifamily's been taking on the chin the last couple of years because the rates, the interest rates have a direct correlation with the cap rates, which have a direct correlation with value. So they've been taking it on the chin. It some builders have been okay, but now they're starting to take it on the chin a little bit. Their product isn't moving as much. You've got lenders that are holding bad paper right now. And but again, I would say for me as an investor who's been a buyer a lot, you know, I've been a little bit cautious, but I'm more cautious in the thought process of could this thing go down? When I look at property, let's say single family homes, which most of us are in here probably looking at, um, the average single family home in America and in Houston is actually up. The average price is up, right? But transactions aren't necessarily up in a lot of markets. A lot of transactions are down in a lot of markets, right? So somebody will say, well, the prices are up. That's good. Someone else, a lot of our friends that might be transactional type of people in the industry, they may be looking at this a lot more negative because transactions are down, right? So it depends on where you stand and where you are in the market. You heard me, Colleen Gilbert, kind of complain about our tenants. That's a real thing, right? Like these tenants, boy, they struggling out here. Because guess what? The economy is struggling. So for me, my perspective is always in line with the economy, meaning I'd like to see that housing, the industry of housing, whether you're an investor or a builder, a flipper or a wholesaler or even a tenant or wherever you at, I like for housing to work for most people, right? I think right now housing isn't working for the vast majority of Americans, regardless of where you sit. And I think that piece is kind of where I'm at. Now, also the question is where are we going, right? So the question I actually asked was where are we going, not where we're at, right? So where we're at is important to know where we're going. But for me, just kind of doing a slight repivot back to Amy's point on because again, I want to be clear why I voted on it, right? And obviously everybody in the room, most people in the room are feeling more positive. But for me, I'm looking at the economy in general. We've lost 1.2 million jobs in America year to date. The year ain't even over yet. That's the greatest decline since 2009, I believe. That doesn't feel like that's going to improve. The Senate bill just laid into the hemp and THC industry, which I'm not in, but that's over 800,000 jobs potentially that could go bye bye. So those are, and going back to one thing that me and Amy were alluding to was the 10-year treasury. I and Amy kind of said this in a non-political way, which was great. Um, but the 10-year treasury is about trust and faith in the American government, into American debt. Basically, if you feel good about America's ability to pay its debt long term, then if you're a high dollar investor from, let's say, overseas, maybe you're from a country that doesn't have a free market, where do you put your money? If you're a billionaire in Saudi Arabia or a billionaire in China, the American US 10-year treasury might have been a safer place for you to park some money into long term versus your own country that might be a little bit more unstable. Well, when the 10-year goes up, what's happening is that the American government, the Treasury Department, has to offer a higher um, rate of return to invest to buy a 10-year Treasury bond, which means that people typically don't feel as good long term, right? So if you feel great about America or whatnot, and everybody and their mama felt great about where America's going, then you would have a lot of people buying these bonds, and the price typically goes down, right? Because you got more buyers. Therefore, America doesn't have to offer the same level of return like a CD, right? Well, when the Treasury goes up, we have to entice people to buy our bonds more, right? So the whole thought process was when 47 got in the office, most of the people in the real estate industry was like, oh, he's going to lower rates, this, that, and the other, and that's going to be great for us, this, that, and the other. But we have not seen that yet. Matter of fact, we've seen Powell actually lower rates, the federal funds rate, which most people think are go hand in hand with the 10-year treasury, and not quite. And he's lowered that twice and been no decline in the real estate rates. Why is that? Because this thing is about faith. This thing is about trust, right? And some people who really track this thing, um, they may not be feeling good about America's willingness to pay their debt long term, right? There's a lot of whispers around us, maybe defaulting, and we have our military and things of that nature. So I'm gonna pause it right there, and I'll go back to it a little bit on why, or maybe my man Ellis tracks this stuff as well. Why the 10-year Treasury has not declined? Because and again, and I don't want this going over anybody's head. The reason why the 10-year Treasury is important is because ideally we want this to decline, so interest rates on mortgages would decline and make some housing more affordable for some people, or make debt. Let me not say housing more affordable. I would say make debt more affordable. But what's up, Ellis? Had to get you up here, bro. Come on up here.
Oh,
Come talk to us.
thank you, Najee. I enjoy listening to you. You always bring an intelligent and current perspective to what's happening out there, so I appreciate it. But yeah, it's funny because I was just listening to something, I think it was on NPR, and they were talking about how very little a president actually has over, the economy as far as like prices and things like that. So when you see a bond market, what you're seeing that's really dictating it, it's not somebody saying, "Oh, we're going to lower interest rates." It's how do the bond traders, the bond investors, how do they survey the market and see where the risk is? So if you see long term rates going up, they're like, "Oh, we're starting to price that into the market that longer term we're going to have a higher interest rate environment." And so it's really about the bond traders that are going to dictate the long term mortgage rates. It's not about dropping the Fed funds. That's very short term. So that's why you're seeing very little effect on long term rates when you see the Fed funds when they drop their basis points, and it has a very very minimal effect on long term rates because it's really the bond traders that are saying, the survey of the economy and going forward, how they see risk in the economy.
No, you're absolutely right, and that's why we really haven't seen a decline yet in that rate, because clearly they're saying that they don't feel too good, or they don't feel good about specifically the bonds that they would be buying. Right, they're commanding a higher rate of return, which is which is the indicator that they may not feel too good. And look, there's some now. With that being said, and I hate that Day left because I wanted her to hear this. With that being said, just because the again, for me, I want to just be clear. This question up in this poll was a quick trick question. As I said, it's all about where you're standing and what your perspective is on the market, like what your perspective is on the market. A lot of times I might say, hey, things aren't necessarily looking good, and people think that's a reason not to buy. That's not a reason to not buy real estate, right? I'm an investor. I'm not gonna lie. I kind of like to see things decline a little bit so I can get things at a better price. You know, it may not it may not sound like saying that out loud,
Hello.
but that's reality, right? Go ahead, RB. Yeah, yeah, you know, that's my perspective. And okay, somebody might say, "Well, OJ, you just crying wolf, that's it, that, and the other." But we are seeing, like in Houston market, entry level price points on is about 250 for a single family home. Investor single families like to rent in whatever type of neighborhoods, that's going to be above below 150. And in my day when I was buying in the 50, 60,000 dollar range. I'm starting to see some stuff get closer to 100, right? I start to see things that are reasonable, that don't cost $80,000 yeah. So, I'm seeing things even, I think the really tore up stuff I'm seeing for 80, 85, 90. It's not all on the market, but you can get it if you know how to hustle and you got some wholesale networks and all that kind of stuff. Um, I'm seeing it at that price. I'm seeing people who are in trouble, other investors who are in trouble. Let's say the guy that was a fix and flip and maybe fixed and flip in the wrong neighborhood that's declining faster, the sunny sides of the world, all of that Gilbert that was going for 200, 225 at a peak. Now that stuff is sitting. I'm talking to a couple local, um, at game day, I had a couple local hard money lenders. So they're very, very in tune with the market. They're sitting on certain types of, I'm starting to have that conversation again with the hard money guys on, maybe they're, hey, can you come buy this off? Can you come take this thing off my hands? Type of conversation. So we're seeing a little bit of some cracks in certain that entry level zone, the lower quality houses, the rental grade stuff. That stuff is breaking because that stuff typically is investor only, and it's the market has to be really good for that to be a lot more first time home buyer, original home buyer, homestead type of property. And the homestead, I want to say the last stat I saw was somewhere around 37, 40% of all home sales in America are done by investors right now. That's that's a telling stat. Let me say that before I comment. That's a very, very telling stat. What that's saying is that the average homeowner is not necessarily able to compete with an investor to actually close something. And I think we know some of the reasons, right? I think we know some of those reasons: um, affordability, payment, down payment, things of that nature. But for me, that's where. So my vote on down doesn't necessarily make me feel bad. So I want to get that clarity, right? Like I'm a blue. So again, guys, I invite you guys to vote however you feel you want to vote. But I want to clarify my vote was less around how I feel, more around what I necessarily see, and and then my feelings will adjust. My feelings are gonna adjust based on what I see. What say you, Gilbert, Colin, you jump on in here as well.
A quick little reset. So we're in the Wealth Masterminds Real Estate Edition. We're going to be coming to you every week on a Monday, right, from 7 p.m. Eastern Standard Time, 6 p.m. Central. For an hour, we're going to do the real estate rush hour, similar to what we used to do with the lunch and learn, but we're doing it in the evenings because everybody is back in full swing. The pandemic is over. So a lot of us are hustling and bustling and doing what we need to do during the day. So we wanted to still make sure that we're able to tap in with you guys at least once a week, right? To make it manageable. So make sure that you set your alarms. We will be back every Monday. And I wanted to give a special hello to some of the people that used to be in our rooms that are back today. I see Anthony over there. I see Tamala over there. I see Tanisha, Dwayne. There's a few other people that are in the room that were in the original Lunch and Learn room.
Oh, I
So
see a lot of our friends. Come on now. I see A Major. I see her. I see Jasmine. I see Brenda. Brenda, you know I see you. Steven, I see you. Tanisha, Dwayne, I see you. Deanna, I see you.
DeVito,
Yeah.
she's there.
Come on now. I see a lot of y'all old school. So I appreciate, first of all, I'm gonna say I appreciate y'all pulling up. Even though we haven't seen y'all in a long time. So definitely come on up here. And say what's up to us for real. Believe who? A Major, was you trying to come up and say hello? Come on up here, Jasmine.
And Onaje. So just to keep it on track, right? It's from 7 to 8. So we got 16 minutes
You see, I'm messing
before
with
we
Nazi. What this?
close. Because you know why? Because listen, we talked about it and we want to make it manageable and we want to also make
Fair
it
enough. We
consistent.
ain't gonna
So
do it if we up here 3 hours
can't
every week.
happen.
You see, it can't happen. It can't happen. So again, hey, first and foremost, love to anybody who's got an opinion about where we're going, what's going on. Feel free to come on the mic. This isn't. I don't like having a monologue. Additionally, if anybody, it's been a minute. If anyone has any questions, we're down for it.
I have a question,
Come
real
on.
quick. What do you think is the solution to like to opening up this market? Right, like they took loans, right, like fixed loans from 30 years to 50 years. They're beginning to drop rates. Like,
Well,
what do you see as a
Mo,
solution to the problem, to the inventory problem?
yeah, yeah. So number one, the 50-year loan was just a proposal. So see, a lot of things was happening right now. They like to throw things out and see how the people feel before they're enacted. So I don't believe that's actually has gone into place yet. Correct, Amy?
No, it hasn't. But there are 40-year mortgages.
Oh yeah,
Those,
40 year been around forever,
yeah,
right?
it's been around forever.
And much like a
No.
40-year, I don't see that this is going to be a popular product.
Yeah. No, I mean, obviously, at the end of the day, it's a supply problem. We have a housing supply problem. If you're talking housing, if you're talking about that asset class specifically, we have a housing supply problem. And part of it is the tariffs didn't help, y'all. Like
Uh,
if you have a housing supply
Amy,
issue,
it's
and
like beating our head against the wall.
Hello.
It's like beating our head against
I
the wall.
know, I know. And so it's very interesting. As a home, if you talk to a home builder, and I've done doing development for a long time, and I still do development, but I haven't done homes. But if you talk to any of them, it's just very difficult to get anything to pencil because the costs of everything are so high. I think, if you want to get more multifamily done, somebody solves the insurance cost crisis, and I think how we solve that, I don't know. If you want more transactions to happen, I don't know if y'all know this, but in Canada your mortgage is portable. So you got a mortgage on a home that's at 2%, whatever your paper's at, you can take that mortgage and go apply it to another house. And
With how much down payment though, Amy?
yeah, I don't know. I'd have to ask my Canadian friends, but apparently, but it makes sense. I mean, if you want real estate transactions to transact, you can't convince somebody who's got 3% paper to go take a seven
It
percent
ain't
mortgage.
happening.
Like that crap
It
ain't
ain't happening.
happening, right? And so you got to figure out a way around that problem, or we just have to wait for the rates to come down again, or Yeah, exactly. I mean, I'm not really sure. So that's there's a supply issue, there's a paper issue, there's a supply chain issue, there's, inflation issue, jobs issue. There's like so many different things that are causing this thing to happen. I will say the U.S. PropTech Council, which I do lead, has a affordable housing initiative, and what we're trying to take a look at is, okay, how can we apply technology to solve this problem? Like, how can we reduce permitting times? How can we, solve supply chain issues? What can we take that is rapidly available or about to be available technology and solve real problems with it, right? And so some of the things, around permitting could easily be solved. There should be no reason why your first pass at plan review is not done by AI, right? And so the permitting times, there's no reason somebody should be waiting on a site plan for a year to get approved. That's just ridiculous and stupid. There's no reason why somebody should be waiting around for 9 months to get something, a permit approved. I mean, that's exacerbating the issue. So permitting's horrible, right? And so you can use technology to solve this problem. That's great. I'm making dinner, y'all, so that's what you hear me doing. But I think there's just a multiple things that are causing this problem. But if you were to list off two, yeah, lower the interest rates, that'll help. People start buying again, people start transacting again. We don't have that magic button where we can force it to go down. So what else do you do, right? Solve the supply problem, you know? Yeah, there's that. So
So
Yeah,
you,
and
you,
just
you
to add on to that a little bit too, just so like what they've been doing in Houston and across other metros in the city, I'm sorry, in the country is just increasing the density also. You know, construction costs are up, as Amy mentioned. There's even a developer here in Houston uh, that partnered with some agencies, and they're building, I think, like a 90 home subdivision where all of the houses are going to be 3D printed. It's the first of its kind in the country. So that's going to help.
Speaker at game day, former speaker at game
Yes.
day. I'm posting you and her panel up
Yeah.
this week on YouTube.
Yeah. So that's also part of it. Just how we build in America is also changing. You know, the build science and then also the density types. There's always, you know, traditionalists, they call them NIMBYs or whatever, who are like, I don't want to see ADUs in my neighborhood. I don't want to see townhomes. There's actually at least 10 different civic clubs across Houston that from the year 2020 and 2021, they've made it a big initiative to specifically fight ADUs, duplexes, and multi-level townhomes from being constructed in their areas. And I think they mean, you know, these people, they mean well. They just, a lot of people just don't understand the economics. And,
yeah.
you know, that's the tough part. You know, it's not 1988 anymore. It's not 1950 anymore. So, you know, you can't take a 12,000 square feet lot of land in Houston, in the middle of Houston, and just build one house on it and think it's going to be affordable. It's going to cost at a minimum $600,000, and you know, let's be real. In our area, that's far from affordable. So we just have to be smarter about how we build and think more about the future opposed to how things have been.
Yeah, I think, and there's other initiatives around parking, like especially on multifamily side where the parking requirements are ridiculous. Like, especially if you're in a downtown area, like Austin got rid of their parking requirements. There is no parking, mandated parking at all in
Really?
downtown
I
Austin.
didn't know
Yeah.
that.
Yeah, so it's up to you on how much parking you want to build, but if you're trying to do a walkable place, there's very little parking. So you can build more units versus having to build this big, huge parking garage or a big, huge whatever. And so it's gone away. That was one of the things, but that was also policy in California. They just borrowed it from California because California did away with parking requirements too. Like LA was having a housing supply issue, and now they have an even worse one. But yeah, they got rid of that, and then you could use, like, people were doing really creative things with the parking, carports, and then building on those, so basically steel structures and using them as foundations to build units above them, and they were doing all sorts of different things to build more units. So it's really kind of interesting for sure.
So we had a couple of people that joined us on stage that I wanted to just make sure that they wanted to, if they wanted to chime in and add anything. Hey, Brenda,
Hey, everybody. It's so great to see everyone here this evening. It's been a while, so
welcome back.
yeah, thank you. Excuse my voice. I'm a little raspy getting over something, but the question I have is for you, Onaje. So I know that thank you. So I know that you will big on Section 8 training. You have Section 8 properties.
Oh, she coming with the hot
I gotta
questions.
come with the hot for these last couple minutes. So I did your Section 8 training some months ago, but I have two properties with Section 8 tenants. Love my tenants, but with the current administration saying, I don't know what is the latest that you heard about Section 8, and what is your
First things first,
strategy?
did your check clear on November?
Yeah, thank
Yes,
God.
well it
It
did
was
though, didn't
slow.
it?
It was slow though. It came late, but it came. Yes.
It came. Okay, so the first threat to your check coming was the government shutdown. So we are past that. So that's
Yes.
yes,
Yeah.
we are past that.
Mm.
Number two, I'm gonna bring back a point that me and Amy just mentioned a second ago.
Okay.
And Mo said it as well. Well, Mo brought it up. There are things that this administration likes to say and tweet out, and then there's the reality of policy and things getting passed. Okay, so half of America believes that there's a 50-year mortgage right now. There is not. Right, that was just a tweet for the most part. Does that make sense? Same thing with portable mortgages. That's something that's being thrown out there as well. That's
Absolutely.
not legal right now. That's not actually been passed. That hasn't actually been done. So one thing that we can learn, right, regardless of your political perspective, we should also always remember that let's not consider anything that this administration is talking about until the ink is dry, right?
Uh,
Like, and that
yes.
I just think that's a fair thing to
Yes.
think about. So let's talk about what has been proposed. So first things first, nothing has changed. That's kind of my
Okay.
point. Second thing is what's being proposed. From what I've gathered, the only consistent proposal around Section 8 that has been talked about by multiple people in the administration is potentially a 2-year cap. That's kind of the most consistent thing that I've heard. Um, and if you say that would kind of suck for some of my current tenants, um, however, that's still 2 years of payments that frankly I'd rather trust over somebody else that may be living in the bottom 40% of our population income wise,
So I
right?
think that happens to be market specific as well. So in New York, where it's a little bit more tenant friendly, I personally wouldn't
Oh yeah, New
necessarily, if
York,
there's
yeah,
going to be a cap
yeah,
on it, I wouldn't feel comfortable doing that because then the burden of being able to actually get them to transition out of your property is too labor intensive.
it ain't
So
happening is what she
I
said. Not
I mean, I'm saying that it will, but with some
you
work,
saying
right?
Madonna gonna make it hard to evict some of these people?
I'm saying that a lot of my friends that own, like I have one of my close friends has a $17 million portfolio right now that they're liquidating because they're concerned about what's happening in politics, specifically in New York City, and just wanting to make sure that they're not going to have that that issue, right?
And
And
that
then
and
also
that's
this.
yeah, sorry for interrupting. That's exactly what happens when people just like throw out things shooting from the hip and don't think through policy.
Right.
Exactly. Why would you need California is the same way.
Yeah,
Anyone where there's a hard time to evict any tenant, they're not going to this whole 2 years of Section 8, basically you're gonna have a harder time finding affordable housing for people. Like
that's
it's just
true.
it's
People
so
have their
horrible.
units open actually. There's a lot of vacancies because it's cheaper to it's cheap in New York. In New York City, it's cheaper for commercial. Let me say commercial multifamily. So it's not this is not as much of a concern with two, three, four. Yeah, not the same thing. So where in the space that I personally play in, where all of my properties are 4 units and less, I don't have the same type of concern. But some of my friends that are playing in a little bit of a different space and they have a lot more regulations and a lot more oversight. They are 100% trying to liquidate, and and honestly, so just in real talk, the condo conversion that I'm going to be selling out the building for is affordable housing, and the reason why is because it's rent stabilized, and the only way to be able to for the particular person that I'll be selling it out for, the only way for them to be able to not take a extreme loss on that particular property is to go this route where they're able to convert it into affordable housing, which is good for the community. So honestly, I do believe in the initiative. So it is definitely a win-win, but it's also a very creative way for this person who's an owner of several buildings across the city in all of the boroughs to be able to get from underwater, because right now this person is bleeding out. And the only way that you can not have that happen is if you try and think of some creative way. And this model actually, it winds up being a win for this person to not have to sell their properties off at a steep discount, one. And then two, also, it's a win for the people that have been forever or generational renters to be able to get ownership in the same building in which they currently reside at a price point. Just about at around the same amount that they would be paying for their rent. So it winds up being a win for everybody. But this is somebody, you know how they always say when there's the person that wins is the person that creates the solution to the problem. And so,
Those are the people that win.
and this
And,
this
and
was,
guys, if
yeah, and
y'all
this was a creative way.
if y'all in the New York area, a little birdie told me that RB is going to have a whole lot of affordable housings up for sale. I don't know who that birdie is, uh,
Over the
but
next 2 to 3 years,
she's going to
10,000
have a
units.
ton of product come to the market in the affordable housing space for sale. And you can't get stuff, you can't get nothing for sale in New York for a good price. But a little
No.
birdie told me she got a hookup and some things about to go down. So y'all
Condos, no less, not even co-op. So we're not talking about fractional
so definitely
ownership.
follow up. But Brenda, I want to go back to that point. That's RB's perspective, and because that's how things are looking, and people are like, "Hey, you guys are Trump or whatever." No, this room right here, because I got to remind you guys, is the reason one of the reasons why we're coming back is that we're just fact based. We're gonna be fact based and cause and effect, right? I might have my own leanings and whatnot, but in reality, that's what's happening in New York. In Texas, Texas just passed an anti-squatter law, which is actually going to make things easier to evict people. So for me, my natural jump in was like, man, I'm fine. I'm not concerned that much, right? Because where I'm at in my state, they got an anti-squatter law. Things are it's already pretty easy to evict in Texas. And frankly, in these type of times, I got a little bigger stick as a landlord, even though some of my tenants acting crazy. Right. We can kind of get rid of our tenants a little quicker. Right. We're just talking facts. We're not talking politics on this point, right? And at the end of the day, Mondani does have policy, right? He has policy. All policy has a cause and effect, right? Things have a cause and effect. And a lot of times these politicians are putting things in place, making statements, thinking that they're going to get solve one problem, but guess what? They're probably causing another issue, right?
And
And
some people have felt that that was kind of being a, what is it called, a snake oil salesman, just to try and it's kind of playing on the emotions of people that are in a financial bind, or just
and
on a lower economic
one
tier.
can say that they all do that, right? Like,
Yeah.
because again, people are selling something, right? We had a good conversation a few weeks ago about the 50-year mortgage, right? That's something a
Mhm.
product I would never get. But it sounds good potentially, right? Portability sounds good until y'all figure out like, hey, people still want you're gonna port over that mortgage, but you still and I want the product to be here. I have no problem with the portability deal here. I just don't know if it's going to be a significant part of. Um. Oh yeah, come on, entrepreneur man.
Well,
Come
no, 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 no. It's 8 o'clock. So what
Oh,
we're
she
going to
told.
have to do, what we're going to have to do is we're going to give a quick room reset,
You see how
because
things be?
Onaje would love to stay here for 2 or 3 hours. And then next week when I say, hey, you ready? Then he'd be like, oh, listen, because the boiler and the HVAC and no. So this is what we're going to do. We're going to
Thank you. I just want to thank y'all for the dialogue.
yeah, we're going to be back though. So listen, Brenza, everybody that's in the room, just first of all, this is the Wealth Masterminds club. I'm sorry, room. So if you're not already a member of that house, then make sure that you tap on in and then join. We will be alternating back and forth. We will be here every Monday, and we invite everybody to come and bring themselves, their conversation, their perspectives, their opinions to the real estate rush hour, which is definitely going to kind of be reminiscent of what we did at the Lunch and Learn. And this doesn't work without all of you here. So that's all of you in the audience, as well as all of you that are on the stage. And we would love for you all to be a part of the conversation.
And
What Onaje has at the top is his Wealth Masterminds Academy link.
let me get a little plug on that right quick, if you don't mind.
Go ahead, go ahead.
So hey guys, hey Joe, what's up? What's up? So hey, what first things first, if you've got a red ticket, if you're not following us, go follow somebody. If you got somebody, if someone's on stage, that means we rocking with them, and that means the people in this room are rocking with them. So we recommend that you go rock with them as well. And the best way to go rock with them is go give them some social currency. Go follow them on another platform to go see what they're talking about, because they cool typically. Because they cool. Because I said they was cool. That's why they on my stage. With that being said, we're bringing this back because for me, look, I just love talking real estate. I love talking economics. I love having a space to talk with intelligent people, fact-based opinions. We ain't with all that drama. So if you love the drama, this may not be the room for you. But if you like good information, that's where we're kicking it at. That's what we're doing. What I got up top is the Wealth Masterminds Academy, our new school community. What that does is what we're gonna do is on these days, on these nights, we're gonna have our general conversation. We're gonna talk real estate. We're gonna talk about what's going on. This is our teaching space, Wealth Masterminds Academy. I think I've got about 12 or so courses up there. There's a chat. We have bi-weekly calls. Every 2 weeks, you can come talk. We're gonna talk about your issues, what you got going on, how do we move your career forward. The cool thing right now, as we head into the holiday season, because I love y'all, because I'm just down with it. You can join for free and take our first free class. It is a membership. If you want to take some more of the advanced courses, or if you want to go do the calls, it is a membership fee. But if you just want to figure out how to get started in real estate, if you have questions on how you get started, what's right for you, just the basics of real estate investing, I do have one of a hour long free class in that community, and then the chat is open so we can all kick it. And maybe if you type something in the chat, a question, maybe I'll answer it throughout the week. So with that being said,
Hold up.
hold on, hold on, hold on.
We got a couple of things that are going to be coming up, and I wanted to make sure that everybody was aware of it. So I haven't seen Sean 10K, but I still have my rb10k.com card. So if you guys want to be in the building when we do things, and there are people that were in here from New York, but even if you're not, you're invited, right? No matter where you are coming from. And I've seen some of the people that are on this stage actually in person at various things that we've done. So we do have something coming up. It is a family financial literacy expo happening with my nonprofit, which is the Key Path Foundation, which is all about how to have a pathway to home ownership in collaboration with Chase Bank. We will be doing that on, what is it, December 20th. And then also we do have our Black History Month networking event that is already planned for February 5th. So if you're looking to kind of tap in with some of the things, it may not be on that 10K card yet, but you can definitely go to the link in my bio on my Instagram, which is NYS_realtor. And make sure you tap in with Onaje and I also on Monday mornings, because we do our walk and talk where you can see us real live and in living color, typically at 9 a.m., unless something emergent happens in real estate. It might be a few minutes behind or a few minutes early, but we try and come around that hour. So just make sure you put on your notification bell so that you can always be alerted when we are back in the building. And don't let this be the last time that we see you. We are going to come back with some hot topics that you guys can all feel free to chime in
I still
and
got more stuff to say
participate
about
in.
this economy and this real estate market. So maybe we bring that back next week. I'm joking. I'm
Oh,
joking. You know, I
Charles,
always
I
got.
say, look, brother.
You know, I always got something to say.
so So, although it's only an hour, it's called what we like to call an hour of power from 7 to 8 p.m. So that way we can come in swinging and ready to have a conversation. But definitely make sure that you are back in the building next Monday, 7 p.m. Eastern Standard Time, 6 p.m. Central, because we would love to continue the conversation and just build back our community on this space because it definitely has been lacking. And we want to make sure that we're able to reconnect with all of you. So, thank you so much for being here with us today. Onaje, do you want to say anything in closing?
Keyword was in closing. I guess we have to close the room, y'all.
We're
Boo.
back. See y'all
Boo.
next Monday.
Some things change, some things never the same. Always stays the same. We appreciate y'all, love y'all. We'll see y'all next time.
All right, y'all. Have a good one.
Good night.